Morning, Jack of all trades, or is it afternoon now? Sorry, I just woke up. But welcome. We're back again with Kaylin and Sam as our producers always. Brendan once again is being an asshole in Florida, enjoying life.
Yeah, doing all that fun stuff while we're stuck.
He's either drunk on a beach or like a racetrack right now. But yeah, Kaylin, you had some setups you wanted to show today.
Yeah, so I was going to try and show this last week, but like we said, our Google Meets thing is getting cheap on us, so they only give us like an hour of screen share time. So I basically wanted to show just kind of like front side versus back side of trades, and just kind of like for anybody that's beginning or anybody that's advanced, this is like a really kind of easy way to figure out whether you should be focusing short side or long side. So I wanted to show. I don't know, David. What do you think? Should I do AMC just because so many people are looking at it, or?
Oh, absolutely.
Okay.
You're probably gonna explain it to some people that are in it, so it's gonna be useful.
All right. Let me just get all these off of here first. Where are we? Okay, so this is. I think I'm on the 60-minute. Yeah. So I'm on the 60-minute line chart right here. Line chart's always the best I find to draw your levels and draw your trend lines and everything like that. So I know I've said a bunch of times on this show I'm not a huge fan of the horizontal trend lines, but this is when they kind of come in handy. The only reason I say that is because I find
Diagonal.
Yeah, diagonal ones.
Yeah.
The reason I say that is because I find diagonal ones are like really open to interpretation. Like depending where you latch them on, like everybody could be getting different ones. So like that's why I like horizontal lines better. So like I usually when I'm playing charts, I usually play off the horizontal lines, but I'll use the diagonal lines as kind of like a rough indicator of front side versus back side. So here we are on AMC. This is the line chart here. So basically what you're trying to determine when I say front side versus back side is like the front side of the move is essentially like when everybody's buying the stock, they're pushing it up, like it's strong, everybody's focused on it. And then the back side of the stock is kind of like when everybody's sort of lost attention, it's like broken under its trend line, it's starting to kind of sell off, like shorts are taking over, that sort of thing. So right here, if you look back here on AMC, this is kind of like when the run started to take off. So on this one, it's kind of interesting because there's a couple different ways you can do it, right? And it depends on like what your risk tolerance is and everything. So what I would do is basically draw a trend line here. So essentially you want to find like wherever the run started and then just draw your line up from that point. So like down here is kind of like where the run started. And then like that would be, roughly where I'd be looking at for like the full front side of the move. So like everything up here I would consider like generally front side, right? If you look back here, like that kind of ties in pretty close with this. Like it's hard to get it exactly on this big of an angle, but you're probably looking at something like that, right? And then you can see like over here when it broke down, you kind of got that little bounce off this line, cut back under. So this is what I would consider like the main front side of the move here, essentially. Like down from $12, we had this big run up. So everything up here is kind of, in layman's terms, this is like a void on the short side for the most part, right? And then once it gets over here where we are now, like this is where you can be comfortable basically shorting every single pop. But in the shorter term, because these things obviously, you don't want to have to wait like 3 weeks to get into these plays. What you can do is you can take shorter front side. So if you go, something like this, maybe where we're here, and draw that up, you can see, if we start here, then we got, touches there, comes way up, touches here again, and then it comes down. So this is kind of backside again, right? So at this point, this is just kind of like a slow sell-off. I think back here at this point now, you can look to sell into pops, right? So if you did want to short it here, this is where the horizontal lines come in handy. So if you got short under here, I'd be looking at, say, these two tops right here, right? These two, you had two tops here, and then it came down at base 2 times on here, and then it sold under. So for me, if I was going to short this, I'd use this horizontal line as my actual level, and then my diagonal is kind of like just my rough determination of front side, back side. And then if you're above, so this line down here, this is our main front side indicator, right? So everything up here overall is still where the longs are in control. So if you are shorting on these types of moves here, whether call them the steeper front side moves or whatever you want to call them, these are the ones that you don't want to be super greedy. Like we're not trying to fade this thing from, $50 all the way back down to 12. These are the ones where you just take it, like line to line, as I say. And what I mean by that is basically, this is our line here. So we broke this. I'd be looking to cover just into the next main bottom, which is this right here. right? So you take that and you cover down, so just line to line, right? That's why I like my horizontals, and they both based, pretty much almost to the penny off that same level, and then we start coming up again, right? So at this point now, this is kind of like another front side to me. So I would basically delete this line, delete all these, and then I would see kind of like where the next move is. So maybe, again, because I'm predominantly a short seller, maybe the next one is now that's my next front side I'm looking at, right? So at this point, we have this line, and you just do the same thing, right? So we have front side here, and then as soon as it breaks that front side, now I'm looking for horizontal lines to use as my levels. So, I would draw probably right there as we came up, bounced off it here, broke through it. You can see it kind of came up, hit that line, broke through again. So now that we've broken through here and we're backside, it's the same thing, right? You're just going line to line. So you can either short it when it breaks this line, comes right down to this next base again, or, you come right back up on the backside of the move, you short right into this line, cover back down again, and then it just keeps channeling between these two levels, right? So it's
Question.
Yeah.
So can you put the horizontal back, the bottom one? So would you play both, like the short when it first broke the diagonal, or would you play the second one? Because if you could put the top horizontal there as well, because I know a lot of the more cautious traders won't play that first dip. They'll look for the confirmation of the trend break from the diagonal, wait for the price to bounce back to that top horizontal line to see a rejection, and they're like, okay, this thing's for sure dead, and they'll play that second one.
Right. So usually what I would do, I kind of like to double these up. Like, so if I was playing something like this, like what I would do, because this is all, these are 1 hour, this is over the 1 hour time frame. So, like this is a day, like this is a day, this is a day. So like, if you're looking from this peak down to this valley, you're looking at like, it looks like 3.5 or so days, right? Including pre-market and stuff. So like the way that I would usually do these sort of things is I would start in really small up here, and then I would look for another, it's just combining more and more. So like I said, we have our major front side move here. So I showed you that first one where we were backside. Now, as we get further along, that line just kind of keeps flattening essentially. So now here's our second front side move. So at this point, like what I'd be looking to do is basically let it come down, because I never chase weakness on the short side because it's way too risky. So I always wait for a bounce. So I wouldn't touch any of this personally. Let it come up. And then I would maybe start small here, or maybe not at all. And then what I'd look to do is, just in like the interim here, like, I would do something like that, where like I'm looking, okay, we have a bottom, we're trending up, we've hit this line. So this is my line of interest. So I'm thinking, okay, 59, 60, that's where I'm thinking it's going to reject. So I would combine that with another smaller, front side trend line right here. And then this little pop right there, that's where I'd get in. So like, you can start in here. I usually don't, just because, for me, like on this particular move, you're looking at getting an extra dollar a share for a potential, like $6-7 reward. Like to me, that's not really worth it. Because if I put in, 20% of my size up here, and then it just blows through that line and takes off, I'm just taking a loss. Whereas if I get him back here, I can just go full size right away, because I know it's not going to come back up, and I know I got way more upside, right? So that's kind of like what I would do, is I'm just combining like, okay, here's my big backside line up here. Here's the horizontal line I was looking for. So it's bounced up, it's hit that horizontal line. I have another little trend line that's kind of happening, within this little pattern in here. And now we're under this, call it intraday or, multi-day trend line. We're behind this multi-week trend line. We're underneath the line that I thought it was going to reject off. Like, we got 3 things that telling me this thing is a great short. So that's where I get in full size. And like the same goes for long, right? Like long, you just want to be looking for front side of the move. So if this is your line, you could buy it off here and, just sell it up into this next level. Then when it comes back down, you could buy it off here again and sell it up into that next top, right? It's the exact same thing, just line to line. So like for a long example here, this again, like you always want to use horizontal lines. Like these trend lines are never really good to use as actual risk levels, because it can flip through it pretty far, and they're like I said, they're really open to interpretation. So like if you wanted to long this, basically what I'd be looking to do is like say, okay, this is my front side of the move here. So I obviously need this base to draw that line, right? So I've drawn it from here. I need to see this first. So what I would do in this case is I would pull this up to that level and this level here. So I'd let it come up, it tops out here at $63, and then it comes down. Now I'm watching this trend line, right? So now we've based here, we've based again. Once you see that reversal, you're just doing the opposite thing, right? So you go trend line, it's the exact same as the backside line I did on the smaller time frame, right? You do that downtrend line. So if we zoom in on this, it's the exact same thing. So here's my overall front side line. Now here's, this is the downtrend line here. So as we're, we've based off this level, which I'm interested in, and it's come over. So right here, at $54, you can buy in full size here, and you just ride this thing right up to that next line. Right? There's not even really any hiccups in there. It just goes, it's line to line. It's pretty clear cut. And a lot of stocks act this way. So this is basically my whole trading system, essentially.
You could catch knives. You know enough.
Nah, I like shorting better. But that's kind of why, when I look at this thing now, it's well, here, let's change the time frame a little bit here from 2020. Hold on.
Yeah, the diagonals are tricky. It took me a while to get them. It's more of an art than science. You can't just pick like a bunch of low points and start drawing a diagonal.
Right. So yeah, so basically, at this point, when I look at this particular chart, if I get these out of here, you could argue that if you're coming from down here, that could be true front side. I don't know. It's just open to interpretation, right? At this point, I mean, this is why I don't really like these trend lines as something to actually buy off. I like the horizontal lines because those are a lot more distinctive. So I could play.
Where does that bottom horizontal? Where does that bottom diagonal lead to with price? Like if the price is about to fall there, say in a few days.
Right now, this is 22.
Yeah, 22.
Which kind of might make sense because it lines up. If you look over here, if you draw this is really when the move first started. This is when this is the first ramp. So this is where you have the most power, and that very first pullback was right there at 21.95. Right, that was when it just started to really take off. Right, so if you zoom out, yeah, I mean they intersect over here. So there's also this base here. So I bet you in the next this week we're probably going to see AMC will come down. I would say probably close to maybe $26. It might come down to 22, and then it'll bounce again. And we'll see how high it bounces, and we'll see. We'll just kind of basically do the same thing we're doing here. Just keep knocking those trend lines flatter and flatter and flatter, and you can just play both sides of the move all day long. But as soon as this to me is the ultimate trend line right here, this one for sure that we got. So if we get, if we break right below this 20, now it's say $22 roughly, in another week that trend line will be around $24. Once that breaks, then it's dead. There's no more trades to be made on this thing.
I forgot my order. Do you remember what I put my shorts at for or my longs at for AMC? I remember I was trying to catch a knife.
I think it's 22.
Did I say 20? Does that make sense?
So, yeah, and that was off your Fibonacci's, right?
Yeah.
Yeah. So we're landing right on the exact same number using different styles, right?
Yeah, I love it when those are one of the more nuanced things. It's called Confluence. So when a bunch of different indicators are pointing to roughly the same price, then that's a high probability target.
Yeah, for sure. Well, that's why I like using multiple lines as well, right? Because if I'm looking at a chart and all I have is horizontal lines, it's okay, it's kind of good. But then if I have an overall backside, and then I have another trend line within that, and I have a horizontal line, and they're all kind of combining into one point, and the stock's going to hit right into that. I mean, those are the kind of things I just throw my whole account at because I know it's going to work.
I noticed one thing you don't use a lot is RSIs or any of the other moving indicators like the MACD or anything, eh?
No, I just honestly, I've tried playing around with them, and I just find it just messes with me because it'll it'll contradict what I'm doing a little bit here and there, and it's just Like I just keep it so simple. It's like I don't know. It's just easier for me to keep it as simple as I can.
Yeah, I agree. Simple is better. I used to have a ton of indicators on, and I know people that have like, and I still have more than you.
Yeah,
And there's people that have like way more than me, and I'm like, how do you get any answers when you have like 8 different indicators? Like,
yeah,
and to be honest, like not like 6 out of the 8 are the same ones. They're all lagging momentum indicators. So it's like you kind of just need one, also, right?
yeah. Exactly. Like the only one, like the only indicator that I really use is basically volume. And like to be
Yeah,
honest, I don't really use volume as like an indicator. Like if I was playing this, like I've been shorting AMC now since like it was at like $56 because it's broken that backside, right? So I've just kind of been shorting this thing down on pops, until it gets back down to $1 or whatever it's going to be. Um, but yeah, like all I really use, the only reason that I use volume is just to make sure people are playing it. Essentially, like I'm not gonna try and trade something that's so thin, the spread's like $1 or something like that. But I mean, overall, it's pretty much just volume, and then I just use my trend lines.
I'm curious though. If you could draw your previous trend line, like the first one that broke.
Yeah.
Uh, I just want to see something because there's sometimes well, I only short Bitcoin, but when I do short Bitcoin, this is one of the things I look for. It's where I rely on the RSI
Okay.
because usually at least one of those diagonal trend lines will also coincide with the RSI divergence. So
Okay.
I use the diagonal as a confirmation. So you see, so what that means for those listeners is that you'll see the price peak, and then you see the price sometime later, like in the next high, we'll do it like a higher high, but you'll see a lower low on the RSI. So you got a lower low on the RSI and a higher high on the price, and that's called divergence. And then we draw a diagonal line. So as soon as you see a divergence, that's signal one to pay attention. Signal two is when it breaks that line. It's basically confirmation that we're on a downtrend now. The momentum is broken. So I'm just
Yeah.
curious if you pulled up the RSI, would there be any divergence on any of the diagonals?
Let's see. I've never used RSI in this program before, so just give me a second. Oh
Oh
wow.
yeah.
Okay.
Oh, it doesn't show up on
Wow.
another window, eh?
Um, yeah, I'm not sure how to do it. I don't want to waste time trying to figure this out right now.
Yeah, no
Uh,
worries.
yeah, I'll just get that off of there now. Oh, hold on. I just took the price off of it.
I think real quick we could probably eyeball to see if there is one there.
Okay, there we go. There's the price.
Yeah.
But yeah. So like basically, what you're saying is like if you see the price trending up and then your RSI is kind of starting to trend down, then you know that people are losing interest on it, right?
It's
And that's
losing momentum. Yeah.
and the same thing goes for the opposite side, right? Like if you see the RSI trending down and the price is starting to trend back up, then that's also a divergence, right? Or is that
No, the price will continue to trend down, but the RSI will start going
right?
up. Yeah.
Right. And it's probably So you would combine that kind of like a horizontal level. So if we were coming down here, for example, and the RSI was starting to trend up, and we were getting pretty close to say this $42 line, then that's probably a pretty good indicator that you can buy off this dip for that next move.
I would probably pay really close attention to when it hit that dip, and then I would buy it soon as it broke that horizontal from the top side.
Right.
Or sorry, the diagonal from the top side.
Yeah.
Yeah, so as soon as
That's
it
kind
broke
of
that.
Yeah, I just want to show one more here really quick. It's a smaller, like this one. I've just been like really doing well on this one over the past few weeks. It's XELA. I'm not really sure what the company is, but
It's like you read my mind. I
yeah,
was
but
gonna ask.
I've made a lot of money on this over the past couple of weeks, so I'll show it anyway. um, yeah, so same idea, right? The thing starts going up here. You just draw your front side, back side lines. Like this could be one. You could have another one, say from down here, right? So you just get all your lines in, and it's the same thing, right? So, if you take, we can do them back here, something like that. So yeah, like this was the first one right here. So on this move here, you can see this was kind of the big up move, right? And then so people look at this, right, and they're thinking, okay, well, the stock's up here, $3.70 or whatever. Like, why don't we try and short this big strong move up here and then fade it all the way down? Well, it's because for me personally, like this is so much riskier because you don't know if the thing's just gonna skyrocket out of there because again, this is all front side of the move. So the safer play, it's kind of a funny thing because the dollar reward is less like on the actual stock. So like if you look in here, if we get in on the backside here, we can hit this pop at say, 270, and then we can fade this thing down to just, the next two lows, which would be, 203 and say 190, right? Just these two levels here is kind of like what you'd be looking to cover into. So if you look at that, it's like, okay, well, we could, try and start shorting up here at 370 and then, come all the way down here to $2. So we're making like $1.70 a share. Well, for me, like, let's say, you wanted to play, I don't know, a few thousand shares on this. Like, I'm not comfortable putting that much size up here. Like I would never put that much size up here because this is just way too overextended for me. It's front side, it's strong. Like I don't know if this thing's going to dip and just, blow shorts out of the water. So why not just wait until the thing comes down? Because if it comes down to here, it still has a ton of room to fall. The trend started at $1.40. So if we're up here at 270, like there's still tons of room for this thing to fall down. So rather than, trying to get in a little bit up here, like maybe you start at 330 and then you get blown out and you say, oh, 350 is going to be it. And then it runs up and it spikes up to 380 and then it blows you out again. And you're getting frustrated. Wait till it comes down here. Just draw your lines in. Here's your little dip, right? At 268 or whatever, comes down, pops into that. You hit that level and then just put full size. You can throw a few thousand shares on that without any stress in the world because it's going to hit that, come all the way back down to the next line, which it does every time. So it's kind of like, the way that I trade it, it always looks like I'm taking a much smaller portion of the move, but I can put way, way more size on it. So I'm getting paid a lot more by doing it that way because when I was doing it the other way, I was trading a lot more, it was a lot more like, it might be more considered more exciting or whatever you want to call it, but it was also a lot more stressful and you lose a lot more because it's just a lot riskier up there. Like I'm at the point now where, I just wait until it confirms and then I'll hop in and I'll just ride it, from level to level. And it's the same kind of thing here. If it goes from 270 down to, 2 and I cover and then it drops to $1.30, like I don't care because that's not what I'm aiming for. I'm just aiming for that one, the predictable move, the one that I know is going to happen. And then you get out and you look for the next one. Same thing over here, right? Here's your overall front side and then it drops down. And then actually, if I put this I'll put this on the candles so you guys can see it a little bit better. Yeah, so like if this is why I like the line chart as well because it's a little easier to find those levels. So if I put it on the candles, it kind of doesn't really look as clean. But if you look at it here, we basically wicked right into those levels. So if I flip this back over to the candles here for 1 second.
Those 1 hour candles. Excuse me.
Yeah, these are 1 hours.
So I just found something you'll probably find interesting. That trend line that you drew.
Yeah.
I know you can't pull up the RSI, but the peak on July 8th. So that was there's a peak on July 8th, I think.
On this chart?
I'm on TradingView, but there should be one top on July 8th, and there was another top on July 13th. So within that 5-day period, there's two tops. One was at $3.86, something like that, and the next one was like $5, something like that.
Yeah. So this is July 8th.
That's July 8th, right? And so the next
over here.
Yeah. Yeah, so those two tops were what we were just talking about in terms of divergence, because on the RSI they coincided with a slope, so a lower high, and then that trend line is exactly where you would be the confirmation that the momentum has switched.
Okay, so maybe that's something that I can start to use then to try and like get them a little bit higher here. Is like if they are spiking up like that and you see that divergence on the RSI, then maybe that's your indicator to start small here and then confirm and then add more once it gets below the line, right?
Yeah.
Yeah, because like I'll just show this again and then I'll be done with all this. But if you look with the line chart here, we're going. Let's pull this down so it's right on. We're going. This is our front side again for this little move, and then this is kind of where I'd be looking for my level right around $4 here. Like that's where I see a base on the line chart. And then if we flip over to the candles here, yeah, you can see like you had this big wick and it went. What was that? 5 cents over the line, and then it just sold straight off back down to the bottom here, 325. So you could throw a few thousand shares at that and you're only risking 5-6 cents and you can make a couple $1,000 in a day basically. So yeah, that's pretty much all I want to show. Is just the importance of, it's everybody says like, oh, short it or go long, or oh, this is a great buy, but just always zoom out and look at the big picture and look at where the chart is, because like that's kind of why I started with AMC, because like when you look at AMC, everybody just, it's just this big hype chart, and everyone's thinking, oh, it's, it's way up here, and every time I look on Twitter, like even on Friday, everyone's thinking, oh, it gapped up on Thursday night or whatever, so everyone's like, oh, tomorrow's the day that we squeeze, and it's going to them, and I'm sitting here looking at this thing, I'm like, this is clearly backside, like it has to come down to at least 26 before it actually bounces, in my mind, because that's where that next line is, right? There's no reason for it to turn around here unless there's a news release. So in my opinion, this will come down to 26, and then it might bounce way back up, but it's going to come to 26 first. So that's, it happens over and over again. It's not rocket science.
No, but I think that's an awesome thing you pointed out, because like I think this is one of those things that only time can teach you. Because like if you're new, you're thinking there's no way it's going from 40 to 26. There's no way it's going from 60 to 20, like especially not in like a few weeks, right? But it's only after you've seen it time and again, like you're like, oh shit, it does happen.
Yeah. Well, it just depends on how far apart those lines are, right? Because like when you look at those lines, like you call it no man's land. That's what like people in the trading community call it, is because there's no play in there. Like, yeah, you can scalp around for a couple cents here and there if that's your trading style, but if you're trying to get like decent moves out of the thing, then you just use the lines. Like if it's at the top line, you short it. If it gets to the bottom line, you cover it, or you can buy it long if that's your plan. But in between is it's just noise. It's just chatter. You don't know what it's going to do. And in my opinion, for this particular chart, it's not dead. I mean, it's still overall front side until it gets below basically $22 a share. So this thing can absolutely still squeeze, or whatever everybody thinks it's going to do, but it's going to go down to the 20s. It's going to go down to $26 first, and it might go down to $22 before you get that next decent bounce.
I'm curious, how's the volume looking? Is it on a decline or on an incline?
I don't have volume. Hold on, let me open it up on here. Let's see here. That's really ugly, but it's declining like quite a bit.
No, but more recently, like that hard sell-off is inclining, so that's dumping. That's not like a few people pushing the price. That's like three people freaking out. That's how I'm reading it.
Well, another thing, just in like a side, another thing I thought was kind of funny. I was just looking at the filings, and there's a whole whack load of insiders in this company that sold all their shares in the 50s and 60s. Like, I was just looking. I was just like, I wonder what these people are doing, because like they know the company's bankrupt, and I was just looking. I was like, oh, I like clicked the first one. I'm like, oh, so and so who's on the board had like 3,500 shares, sold every single one at $60. So and so, this other person had 5,000 shares, sold every single one at $55. I'm just like,
Curious.
take.
What's the time frame from like the highest peak till when those guys sold? Like roughly, like was that like a few weeks?
What is this? The second? I'm not sure when it was exact. I think it was up in this consolidation here.
Yeah.
Most of them were getting out because they had this. Because I think obviously the people that are in the company are the ones that are. Hold on here.
Because I have a strong. Sorry, go ahead.
Yeah, I was just going to say the people that are in the company, like they just want to sell their shares for as high as possible because it's a bankrupt company, right? So like at this point, they're trying to get out for as much money as they can before the thing basically goes back to zero or they file for bankruptcy. So like, if it was me and I was an insider, like I see this huge move, you have this big Twitter following, and then it tanks here, I'm still going to hold on because I don't know if it's going to go up to 100 or whatever. And then once you see, I think what happened probably, from what I know anyways, is we had this first line, remember that first upward trend line that we kind of drew like somewhere around here. So I think what happened is we had this big spike, it came down, they were all kind of waiting. And then when we broke here, we had this next move up and all the insiders were selling into this. Because to that, that's what I would do. Because I'm looking at this, I'm saying, okay, now we're in the backside of the move. So let's get the hell out of here while we're still in the 50s and 60s and, before this thing falls back down. So I think that's probably what happened. I mean, that's as a technical play, that would make the most sense to me anyways.
This would have been a good question for Brandon, but I know there's SEC requires reporting for them to sell. So I can't remember if they have to report like a certain amount of time before they sell. Because because it would be really weird if they're like sold at the top, right? Because they have insider
Mhm.
information, they're acting on it. So I think they're restricted with like say just I'm just pulling out a number, say like 2 weeks before you plan to sell, you have to report it to the SEC.
Yeah,
So I'm just wondering because if that period there, like they saw the first peak and it looks like they didn't break it and it didn't hit that diagonal, they're like, oh shit. Then they're like, I'm gonna sell, and then they wait for 2 weeks later, like dump. Like that's why I
yeah.
did that kind of double top thing, right?
Yeah. I think that is what, because I remember I saw some people tweeting saying that, like, oh, so and so, like, insiders have sold all their shares now, and the stock still hasn't gone down. So this is like great news for us because it's not diluting it or whatever. And I'm sitting over here like, okay, everybody that's working at this company is dumping all their shares. That's not good news. I'm sorry.
That's not good news. And it's like I don't even think it's good news that the price didn't tank. That means people like regular buying it at that price, which
Yeah.
tells me there's less money to be buying it at a lower price.
I know. The whole thing is just, yeah. But I mean, the funny thing is though, like I didn't trade this for the longest time. Like I said, I've been kind of like, I've been swinging this thing short for the past few weeks now since it's broken down. But like I didn't touch it for the longest time because I've never seen that much activity on a stock. Like on Twitter, I didn't know what it was going to do. I don't know. Everybody's talking about all these option squeezes and this and that, and there's all these naked short. Like, I don't know any of that stuff. I just don't, right? But like I can still make money doing what I do. And like I've been shorting AMC for weeks, making money, knowing what I know, and I don't know any of this other stuff that all these guys are talking about. So like to me, that tells me that this chart just trades technically like any other chart. So like moving forward, I'm just going to trade this as if I would trade any other stock because it's shown me now that it's just going to do what these stocks do, which is just follow the trend lines, follow the horizontal lines until it gets low enough that there's not any more trades to be had.
Yeah, I noticed that with most stocks actually they're all pretty technical. Sometimes you have to zoom out a little, sometimes you have to zoom in a little, but you'll usually find that they do trade pretty technical. They'll listen to the right levels and trend lines and whatnot.
Yeah,
So
I think it's more so just like those initial moves, like the initial runs that are kind of you just kind of sit back and watch. But then once it kind of settles itself out, then it just becomes the same old technical line to line. And well, like we just kind of proved it. Like I had my horizontal and my trend lines, and use your Fibonacci's. We lined up almost to the penny.
yeah,
Where
yeah,
you're trying to dip by, and where I'm saying it's probably going to base and turn around.
yeah, exactly.
That just goes right there, right?
I love this stuff. There's so many different strategies, but I love it when we talk in the chat and we have the same numbers with different methods. I'm like, okay, that's when I gotta
Yeah,
act.
then we know we're good.
But
All right. You want to move on to the real estate stuff here?
yeah, I just had that. So I had a couple conversations this week about real estate, and I didn't. And like I don't know that like real estate is one of the areas where I know like very little about. So I don't flip houses. I don't. The only the reason I pay attention is because I kind of want to buy a house at some point.
Yeah.
But but the conversation was that houses are unaffordable and people are thinking like, well, when can we ever kind of become an owner and whatnot? And like a few episodes, a few months ago, I think on an episode I kind of touched on it, and it reminded me of the data that I found, and I just wanted to pull some stuff up, Sammy, if you could share my screen. But it was basically I have a theory that within 3 to 5 years, home prices will see a significant drop. And I remember you mentioned like your dad's fund manager, was it? He was saying something that was more like a little bit sooner, like 2 to 3, was it?
Yeah. So, like the guys that I was talking to were saying that they're thinking probably 2023. And for anybody listening, that like David and I, we're in Ontario, Canada. So the housing market here, I think, I'm pretty sure it's like considered one of the most expensive in like the world, like in Toronto, like GTA area. So it's like the housing market's basically just been nuts here for the longest time. Um, but yeah, like the guys that I was talking to were thinking like probably 2023, there's going to be, if not a decent like pullback in housing prices, then there's going to be a serious like flattening out of the curve kind of thing. And like I have some of my own kind of thoughts on that from both sides. So I want to hear what you have to say first based on what you were looking at.
Yeah, the reason, like, it's tempting to say it's going to happen soon because I think it's based on the speed that the home prices have gone up. People expect if it goes up fast, it'll come down fast. What I've learned from the last year is that markets are pretty resilient. Like bubbles can last quite a while and just be surprising, right? And the
Mm-hmm.
reason I say it's 3 to 5 is because it kind of coincides with where did I pull this up? So it kind of coincides with a demographic issue. So here's home ownership rates, right? divided by age group. So you can see like people 35 and younger just not owning homes. You know,
Yeah.
35, 44, like it's on a steady decline of ownership, right? But what's interesting is like the boomer generations, which is that 65 and over now. They're not only the wealthiest, but they're probably the largest demographic that's homeowners.
Mm-hmm.
And so I don't want to be morbid, but they're all going to start dying in the next 5 to 10 years, right? Or even if they're alive, they're probably going to start going into retirement homes, or maybe having the kids move back in homes. Either way, what I'm saying is there's going to be an abundance of supply in the market, right?
Right.
So supply and demand still dictates price, and so I think there's going to be a large amount of supply in the market, coinciding with a time that interest rates should be quite a bit higher. Like interest rate for a home goes up 1%. When you're talking about a $1 million, $2 million home, that's a big deal,
Oh yeah.
right? That really cuts people out of ownership. So if interest rate goes up to maybe even 2.5%, 3%, that puts a lot of people out of the market, right?
Mm-hmm.
So then you have a situation where it's harder to get a loan. There's an extra abundance of supply, and I have a feeling that a lot of millennials who could be saving up for homes right now, or millennials and younger, could be saving up for homes right now, aren't, because it seems like it's such an indomitable task. And so they're just doing the YOLO lifestyle. I'm going to rent and go on vacation, and then when the right opportunity comes, it's going to be like, shit, I didn't save when I could have.
Mm-hmm.
So I mean, these are all like just speculation, but I think it does follow some logic, and I think because of those factors, home prices will decline in about 3 to 5.
Yeah. So I have a couple different thoughts on that. Like I kind of agree with both sides of the coin on that particular argument, because like the way I look at it. So first of all, I don't remember the exact number. I think it's 2%. So when you buy a home here in Ontario, they have a thing called the stress test, which basically is like if the current mortgage rates are 2%, the banks will qualify you for a mortgage that's 2% higher. So they'll qualify you for a 4% interest rate on your mortgage. So like let's say with like David, like let's say with your income you can afford a $1 million home at the current rates, which are say 2%. The bank will only allow you to have a mortgage on like an $800,000 home because they're basing it on 4%. And the reason that they did that is so that when all these people remortgage, because that was the biggest thing I was talking to my mortgage broker about when we bought our house was, like what's going to happen in a few years? Like, is everybody just going to like lose their house because they're like, they're stringing themselves out way past their budget? And that's what he explained to me. He says, well, no, because for us, for example, like we can afford a home that's worth way more than the one we're in now, but that would be on the higher interest rates. So essentially, like what they're trying to do is like, when we got our house, like interest rates were really low. I think now they're around like, just over 2%. So if the interest rates go up to even 4%, which is really high, then all those people that bought homes, in the high 1% or 2%, they'll still be able to afford their homes on their current salary today. And
Right.
assuming, obviously, in a 3 to 5 year mortgage, they're not going to get a raise or make more money, which they most likely will anyways. So for that reason, I don't think that a lot of people are going to be like getting kicked out of their homes unless obviously interest rates go to like 7, 8, 9% or something ridiculous. And the other thing is, because they're saying housing prices are going up so much. There's another big thing here in Ontario, anyways, is immigration, which has been shut down basically for COVID, right? So like we have lots of immigration here, lots of people coming in with money that are buying houses. So currently, the market's been going pretty crazy because everybody's basically buying houses or trying to get out of the city and all that kind of stuff. Once COVID, whether it's a year from now or 2 years or whatever it's going to be, finally really kind of tapers off, and we can allow, assuming our government doesn't change its policies, immigration getting back up to the same kind of flow that it was before, you're going to have way more people coming in with money again. So even if there is potentially a bit of a surplus in housing from, say the baby boomers or people losing their homes because interest rates go up too much, that could easily get matched by the immigration coming in, which would cause the prices to not drop at all and potentially just keep rising, right? So that's kind of the devil's advocate side of that coin.
No, I agree. I saw two factors that could possibly keep the prices up or from not as dropping as low. One of them is the foreign investor immigration thing. Although at least from the Asian side, I think that side's going to start drying up from the Asia. I'm not sure about Europe. I don't know there, but like China's right now, they're cracking down very, very hard on capital outflows. because of the way they print their money, they can't allow too much of it outside of their country. Otherwise, it kind of like starts to threaten their market, their economy. And so they're heavily restricting how much money can be moved out each year by citizens. And on top of that, they're really clapping down on Hong Kong right now. And a lot of buyers are from Hong Kong. Because the thing about Hong Kong is it's so expensive that if you sold like a shack there, you could buy a pretty decent house here. It's just ridiculous.
Yeah.
Right. And so, but now that China's like really trying to exert their control over Hong Kong, I wonder how many of their people they're going to allow to come out to, buy a home here, or even become a citizen here. So that's like one. So I see that foreign thing as a factor, but that's the X spot that I don't quite know how it's going to play out. But the one thing I didn't anticipate that apparently is happening, Sam, if you could pull up my screen. This is Canada. Investors account for a fifth of home purchases in Canada. They're driving up home prices. So this is kind of like going to the rich get richer thing. Investors, a lot of the home prices are being kept up because investors are buying homes. And actually, BlackRock Blackstone made news the other day. They put $6 billion into buying and renting homes. And so what's happening recently is like hedge funds are starting to buy up properties.
Yeah, I was reading an article about that actually. They were buying like whole subdivisions, and I didn't really realize that. And I heard people like getting all upset about it because they're like a bunch of my friends still don't have houses or anything like that. They're all like almost in their 30s kind of thing, and it's like, well, how the hell are we supposed to afford a home if they're like just coming and buying it and listing it higher, trying to turn a profit, or renting it? Right? It just makes it even harder. I'm not sure what the government stance is going to be on that.
This is the problem with lobbying. I feel like the government's going to their hands are going to be tied.
Mm-hmm.
But it creates a problem, right? If hedge funds who have the money to buy the homes now or up or down become landowners and they just perpetual income is rent, right?
Yeah.
What happens? It's so like I worry that without government intervention, house prices could stay up, and then it's because of these factors.
Yeah, that's kind of what I was thinking too. Like I don't see housing prices coming down. I can definitely see them slowing down and then tapering off and speeding back up as they do. But unless we have like a major economic shift, I just don't personally see them taking a dive anytime soon because I don't think the government can let it. Especially now, even more so now if you're getting investors and stuff buying this, like they're not going to be able to.
Yeah, it's multifaceted for sure.
Yeah.
I had one thought though that the supply, the extra supply in the market thing, right? So a couple of the people I was talking to, they made a good point. They're like, the children of those boomers are probably going to inherit the homes, right? So they're going to split it between the siblings and whatnot. And I thought, well, realistically, maybe you could tell me, but realistically, I think those homes are still going to end up being sold on the market because if you look at the current culture of just like not really saving, these people are probably going to be inheriting the homes at a time when they're heavily in debt. So then inheriting a home, like $1 million home, is like a jackpot. So the thought process could be, hey, maybe we sell the house, downsize, and pay off our debt. So either way, I think those homes are going on the market.
Right. The other thing too that a lot of people don't realize is that you have to pay taxes on that, even if you do get a home, like in a will or whatever. Like if you have, my dad explained this to me because he's owned our cottage for like over 30 years. Me and my sister always joke like, oh yeah, when we better get the cottage in the will kind of thing. Then the one day he's like, oh yeah, it was like, oh, I gotta leave you like a few $100,000 with it too. I'm like, what are you talking about? And so I did some research. He explained it all to me. So like, basically he has to leave you enough money to pay the taxes, like essentially on the sale of that home. So like, if you're looking at something that's like, a $2 million property, if somebody passes away and gives you that property, you have to pay the government like something like $300,000 or $400,000 in taxes to accept it. So that's why you get so many, like when you see an estate sale, that's why it ends up being like such a good deal, is because a lot of the times, like, like God forbid, imagine someone in my family passed away right now and they left me their home, the government would be standing there like, okay, you have to pay us, $200,000, $300,000, $400,000 in the next couple months, or, we're taking a house. So that you have to basically rush to sell it. So that's why I think a lot of those things, that's why I kind of agree with you. I think a lot of that stuff is going to go on sale.
I'm just trying to look up real quick what the percentage is. But that makes sense. I forgot about that one factor.
I'm not sure what the percentage is, but I know it's a lot of money. Like it's enough that like you wouldn't be able to afford it.
On top of that, non-registered capital assets are considered to have been sold for fair market value immediately prior to death. Any resulting capital gains are 50% taxable. So you're just getting hosed.
There you go. So that's why. So if you look at my parents' cottage, they bought it for $30,000 in the 80s. Now it's worth a few million. So their capital gains on that is like, say $2.5 million. So I'd be paying tax on $2.5 million if they gave me that cottage. It's fucked, for lack of a better term. So that's the thing, though, right? So if you get these estate sales, it's like, oh yeah, it's great, mom and dad or grandma and grandpa left us the house, but you have to sell it. You have no choice, even if you want to keep it, unless you got a few $100,000 laying around that you can just afford to drop right then.
Wow, that's just ridiculous.
So that's
well, so I guess that's I think those are going to be the opposing factors to watch then, like how many forces are continuing to buy, whether it's funds or foreigners, and then it's going to be versus supply. How much supply will be dumped onto the market?
Yeah, exactly. It's going to be really it's really interesting. That's the funny thing. It's just another market, right? Real estate. It's just another market. But the other thing, I think I mentioned this on one of the other episodes too. I was reading an article on Bloomberg about they were doing like some investigation on whether or not, because it is so hard for people to afford a home right now in Ontario and stuff. A bunch of my buddies are single and stuff like that. So it's like, how do they afford a home in Toronto? Like you can't unless you're making like a crazy salary, right? So they're saying that it might even make more sense to just invest, like to literally just rent for your whole life and just put money in the stock market. Because like if you look at it's like I said on one of the other episodes, you put $30,000 in the S&P when you're 30 years old. By the time you're 65, it's worth $1.5 million, right? So like, same kind of deal. Like, I look at, like, again, if I just look at my, my cottage, like, it was bought for $30,000 in the late 80s. So here we are, 30 something years later, it's worth, that $30,000, if you put it in the S&P, would almost be worth on par what the property value is worth. So depending on how the markets move, it actually might make a lot more sense for you to just invest in the markets and just rent.
Yeah, that's a really good point. You know what? I wonder if the culture is just going to go that way in like 10 to 15. Because like, I don't know if you noticed, like because we're similar age, in just the last 10 years, there's been a huge shift in, like, so I've got a hard drive that's full of MP3s and movies. Because when we're growing up, it's all about owning shit and keeping shit. And then now it's all about Spotify, Netflix. I don't need to own anything. I'll just keep paying the monthly fee and I'll have access.
Yeah.
Right. So like not home ownership's like a natural progression of that. Like, why am I going to own a home? I'm just going to pay my monthly fee.
Right. Well, think about it. If you want to own a home, like first off, you want to put 20% down, because then you're not paying your mortgage insurance, which makes your payments go up like $500-600 a month, depending on the value of the property. So let's say, you're trying to buy a house that's worth, say, $1 million, which around here is kind of, your run of the mill generic house, unfortunately. And you got to save up, you got to save up $200,000. And then you still have to have enough income from your job to be able to pay an $800,000 mortgage. So it's very difficult to do. So instead of trying to save up, desperately save up $200,000, which could take you decades, just rent, pay, because you got to, like, say your mortgage payments are going to be $2,500 a month or whatever, or $3,000 a month, including your, your utilities and whatever. Rent a place. So you're paying that same amount. The amount of time it would take you to pay $200,000 in rent is, astronomical compared to what it would take you to save that kind of money. So if you're taking all that extra money that you would have been saving to buy a house, which is also continually going up in value. So by the time you actually save that $200,000, surprise, now you need $350,000. Just pay your rent, find a decent place that you like. Don't go crazy, and just put all your money into the markets, into safe investment stocks. And you probably end up getting the same, a very comparable return to the actual real estate.
And the other thing, I just thought the immediate danger of saving is like just the idea of inflation, right? Because the government keeps printing the money, and the buying power of that dollar you're saving, you're nesting away, is just being eroded every year.
Mm-hmm.
So Sam, for my screen, could you just throw this up real quick? I just really quickly because I'm gonna. Brendan is still hesitant on pimping his family's mutual fund, but I'm not. So I think last time you said they did, or at least privately, they said you were doing like compound 17% a year for quite a while. Like, so this is like a normal return for them, right?
Mm-hmm.
And I was just thinking, like, if you should be in the market, but let's say you don't feel up to it to manage yourself, find a good mutual fund, especially ones like Brandon's where they have their own capital in the fund itself, so they have skin in the game. You
Mm-hmm.
put $20,000 initial investment, you get 70% a year interest, 15 years to grow. It's $250,000. I mean,
Yeah.
try saving $250,000 in 15 years versus
Yeah.
this. So like
So and then but you keep adding into that too, right? So you put
that's right.
$20,000 in, and then every month you keep buying more and more and more stock. So yes, I don't know,
Let's
change it
say
for $400 a
500 a
month.
month.
Yeah, 500.
400 bucks. Let's do 400 conservatively speaking. And look at that compound. Fifth, what's that? Eighth wonder of the world. Warren Buffett says.
Yeah, look at that.
Now you're up just to the addition of 400 a month. You doubled to 500,000 in the same period.
Yeah, so you save up $20,000, put in the stock market, add an extra $400 a month, and then in 15 years you have $600,000. That'll buy you a house. If you just try and save that money without putting it in the market, you'll never get a house.
At the very least, I think if people are into long-term planning, which I think they should, it's like, how are you going to get that down payment? Well, you start with a little sum, you nest away 400 or whatever it is a month, you can, and then for the next 15 years, this will be your down payment because that's mostly the barrier to entry for owning a home, right? It's not necessarily the monthly mortgage payments; it's that first chunk that you're required to pay.
Yeah, for sure. So that's why this is like so important though, is that, I tell this to everybody. I was like, it's so important that you invest in the stock market because otherwise you just get left behind. I mean, like the economy keeps growing, everything keeps moving forward. Like, if you have $20 sitting on your desk, next week it's less than $20. 2 weeks later, it's less than 20, even more less. It just that $20 10 years from now, it might only be worth $12, right? Like it just fizzles away. Like it's garbage. Like cash is absolute garbage. Like the only reason that I have a certain amount of cash on hand is just because of emergencies. I got enough money saved away that if, my water heater explodes or I got to redo my roof or, a tree falls through my living room, like stuff like that. Like I have enough cash on hand that I can cover kind of those basic things. But other than that, like I invest everything in the markets because the markets move with the economy. So I want to move with it. I don't want to sit behind and try and desperately chase it. It doesn't make sense.
Yeah, I was gonna say, what's his name? Ray Dalio, the one of the largest. He runs one of the largest hedge funds. He's famous for saying cash is trash.
Yeah.
And it's like, I did disagree with Brendan once. I'm like, cash is trash, but it's too general of a term. Like, just to have it and not have a purpose for it is absolutely trash. It's a waste. But like, me and you, we both have cash on the side, but we know exactly what we want to do with it, given the circumstances.
Yeah. I mean, everybody needs to have a certain amount of cash on the side. Like, you don't want to be like, you don't want to have like $200 in your checking account. I'm sure any of you guys that are traders or investors, you probably all seen those little memes where it's like, life of a trader, $500,000 in my brokerage account, $300 in my checkings account. Like, oh, I have no money. I can't go out this weekend. Right. Like, that's all funny, but you don't want to actually live like that. You want to have like at least a decent amount of money saved away that you can have in an emergency, because the worst thing that could happen to you as an investor is if you go into a bear market or like a stock crash. Like let's say we had 2008 where stocks were just selling off. It took 2.5 or 3 years for it to get back up to the same levels that it was. The last thing you want to do is to have to sell stocks that you've owned for years at a huge loss because you didn't have enough money in the bank and you got in a car accident, you had to buy a new car. So now instead of buying that new car for $40,000, you had to sell a whole bunch of stock. So that car actually cost you $200,000.
Yeah,
That's the last thing you want to do. So that's why cash is important for that reason, is to have enough on hand that you're comfortable. You look at all the scenarios. If anything really bad happens, catastrophic, you have the cash to pay for it.
I think our school systems failed us by not teaching. I don't even know what you would call the class, but somehow to personal finance management or something, like starting as early as high school. Because
Yeah.
it just seems like people don't have a habit of like planning for the future, right? It's like it's like a slippery slope of just seemingly bad luck if you don't anticipate the things that are likely to happen,
Yeah.
right? And it
Yeah.
compounds. Like one bad thing just snowballs into like 1,000 bad things.
Yeah, it's true. Like they don't teach you anything in school. Like, I didn't even know what a mortgage was. Like I heard people talking about it. I was like, I'm like 18 years old. I'm like, so okay. I asked my dad one day. I was like, okay, just explain to me what a mortgage is. Like I keep hearing this word. I don't even know what it is. Like what does that mean? Because like, oh yeah, we have a mortgage on the house. I'm like, what? Like is that just money? Like what is that? And my dad's just like, it's just a loan. Like you just take out a loan so you can buy the house and then you pay the bank back. I was like, oh, okay. Well, I didn't know that. You know, like it's literally that straightforward, right? But it's the same thing. They don't teach you any of that stuff. And like for me, like I've always been the kind of guy where like I've always been, you know, thinking ahead. I've always wanted to have money. Like I've always worked really hard. But when I was younger, you know, it kind of sucks that I didn't have this knowledge like when I was in my teens and, you know, my early 20s, because, you know, I'd probably be a lot further ahead than I am right now. But like my way of getting around that was like, okay, I just want to have a lot of money. I don't want to work forever. I got a lot of energy right now. So, you know, that's why I work, you know, 80, 90, 100-hour weeks. And I've been doing that for, you know, years and years and years, is because that's all I like. I'm like, okay, well, the only way that I know how to make money is just to work. So I work, you know, all day from the time I get up to the time I go to bed. And, you know, now after doing that, I'm kind of in a pretty decent spot now. But I'm still not slowing down. Like, and now that I know what I know now about the markets, I can use all that work ethic, put it into the markets, and then your returns just grow even more.
And I think that's a great point. You sound like you started really early. I didn't start till I quit my office job at Brinks, and that's when
Mm-hmm.
I took control of the whole thing where I took control of my RSP. But before that, I didn't have the mindset that you did. Probably at the same age, like so. Where I learned the importance of calculating interest was my first year in college. They had frosh weeks, right? So TD set up a table. They're like, student credit card. I'm like, oh, credit card. Let me sign up for this thing.
Yeah.
That was like famous last words, man. Like I maxed that shit out, and I just whatever I paid off, I kept maxing it out. Like it got to the point where I looked up personal line of credit, unsecured line of credit, and I got that thing, and I put the credit card debt onto there, so I get a lower interest rate. And then I ended up working like 3 jobs to pay that shit off. And after that, that was like a huge 3-year period. And I was like, wow, what a lesson, you know?
And yeah, I never did that. I was always like, I literally just used my credit cards to get the points. So like I would use my credit card and then I would go on my phone immediately and pay it off like, before it even showed up. So, yeah.
Your mindset's a lot like my dad. He does the exact same thing. He carries no debt, and he like saves every penny, and he's like,
Yeah.
yeah. I
Like
wonder why.
is like I think 900 is the highest and mine's like 886 or something. It's like a couple points below. Because I remember when I was talking to the mortgage guy, he told me what my credit rating was, and he's like I've been doing this for like 15 years, and I've only seen like 7 people that have a credit rating like yours.
Yeah, I think we compared once. Where's this? I my most recent was 844. It dropped 10 points because I got the finance for the car,
Oh,
but
okay.
that'll bounce back up. It's not a big deal. But like they literally like I improved it instantly because I think anything above 800, you're just like, you
Oh
know,
yeah, you get approved for anything. Yeah, for
yeah,
sure.
yeah, it's
Yeah.
hilarious. But yeah, I really think they should be teaching this stuff in school because it doesn't set anybody up for life. To no good.
Yeah, I know school. I have so many mixed feelings about school. Like, I can't complain about it because like I wouldn't have the job that I had. Like, I wouldn't be where I am without school. But by the same token, it's like it depends on the person, right? Like, if you're like really driven and you know you're planning on starting a business and all this kind of stuff. Like, you can learn anything you want to, and I think the biggest shift is going to come from employment. Like you know, employment has to be like, okay, you know, you don't need to have X credentials and X, you know, schooling or degrees or diplomas or whatever to do this job. Like, if you have experience or like if you have an interest or whatever, like we'll interview you and like if you're, you know, you're a quick learner, like we'll bring you into the position kind of thing. Like that's where the shift has to come from because unless that happens at the employment level, it doesn't matter, right? Like I could, you know, I'm an engineer, right? So like I could have learned everything that I know online easily for free. But if I go to an engineering firm and say, hey, like, you know, I know how to do all this stuff. Like, yeah, I just spent like the past 2 years on Google and I figured it all out myself. You know, they're gonna be like, get the hell out of here. Like, what are you talking about, right? So
Yeah, I think there's a shift in employment. A friend of mine just messaged me. I think it was month ago. We're talking about applying for work, and he's an engineer too. I forgot what kind, but he couldn't find work in his specific field. And a buddy of his told him to apply for his company, which was kind of a different field. but he did it anyways. Like, I'll talk to my boss to expect your resume. So he went in for the interview, and the boss was like, was talking to his friend afterwards, and just said, "Yeah, I like the guy. I like the way his mind works. You know, whatever else we could teach him on the job, but he's got the characteristics of the person that we want to hire."
Yeah, yeah, that's that. Like to me, if I was an employer, that would be the most important. Like, and that's why I think I mentioned it before, that like Kevin Hart documentary I was telling you to watch. Like, I just love the way that Kevin Hart like runs his whole business, because it's him and it's all his buddies from like when he was a kid that run all different parts of his business. Like one of his buddies, I can't remember his name, but he was actually like homeless at the time. But like Kevin had known him growing up, and when he started to get famous, he like called him up one day, and apparently, the guy's like super modest. He's like, "Oh yeah, everything's fine, whatever, I'm good." But like found out he was basically living on the street. And then Kevin is just like, "No, no, no, man, like here, come, you're working for me. Like I want you to like produce this TV show that I have going on." Just like pulled him, but that's the same thing. Like the guy had no experience, but like who he was, like he knew he was a reliable guy. He had whatever qualities he wanted to do this job, and he just put him in that role, right? Because he knew that he could learn it, he could pick it up, and like that's the same way that like I'm that way personally. Like if I meet someone or I want to work with someone or whatever, I don't, like, yeah, experience to a certain degree is good, obviously, if you kind of have an idea what you're talking about, but I don't really like, I'm not really going to sit there and look at you on paper. Like I want to know you. I want to talk to you. Like I want to get to know your personality. Like that's what's a lot more important.
Yeah, I didn't see that show, but I read Kevin's biography. You can't make this shit up. I love that title. But he's like me though. He makes mistakes big and first time, and then he learns the hard way by getting scarred. I remember there was a part about his life where he got he just started breaking out. He got a show deal on, I forgot what network, and it was for one season. He immediately he called his dad. He's like, "Dad, we rich." And then he started buying cars for everybody. And his dad bought a house, $50,000 house. Like everybody just started buying stuff. And I think by the time the season was over, his accountant's like, "You're broke, dude. You have nothing." And he said it was one of the most painful things in the world, where he had to call his dad up. He's like, "Dad, you have to sell the house."
Yeah, yeah, it's tough, man. Like again, it's just a learning experience. Like everybody learns, got to work your way up there at one point. But yeah, it's just, yeah, it just depends who you're around, and that's why it's the best to have this good group of people around you.
Yeah, but it shows why he's like so smart with money now, right? Because if you made those mistakes and you realize how fleeting success and money could be.
Yeah, yeah. The
Like,
markets are the same thing, man. Like you and I know that better than anyone. That's why like, again, like I was just saying, like I wouldn't, why don't I short it way up here? Like, I wait until it comes down, and I wait till I know it's predictable, because I know how quickly that money can go away. Like, you can make $1,000 today. Tomorrow you could lose 10,000 if you're not careful. Like it's in and out so fast. Like that's why you just got to be really careful. And you got to have really set, like strict rules. The same thing goes with business, right? Like you can't just be flying by the seat of your pants if you're running a business. Just like you're saying Kevin does there. Like you got to have rules. You got to have plans. You got to look at your numbers, check your balances, and you got to make sure everything's actually going to function properly. Because if you're just, spending stuff around, people don't really realize that. And it's like, yeah, maybe you don't realize it until you have money, sort of thing. But it doesn't even really work that way, because no matter what scale you're on, like, like let's say you're in high school, you're working a minimum wage job, and you get, I don't know what minimum wage is nowadays. Like, let's say your biweekly paycheck is like, I don't know, $800 or something, or $700 after taxes.
it's $15 now,
Is it?
or almost. Or that was the target. It's somewhere near there now, I think.
Okay.
Let me
So
look
like,
that up while you finish your thought.
okay. So yeah. So like, let's just say for argument's sake, you're making, $800 every 2 weeks or whatever, working a 40-hour week. Like, if that's your first job and you're 16, like that's a ton of money, right? You do that for 2 weeks, you got like, $1,600 in the bank. Like, that's insane. You've just worked for a month and you're like, wow, like I got $1,600. This is wild. And then, you go out with your buddies to, Niagara Falls or whatever, and you spend a few $100, and then like, you buy a bunch of food, you take a taxi somewhere, and then like you get back, and, you're like, oh, I want to get a new bike. You buy a new bike, and then all of a sudden it's like, wow, I only have like $100 left. Like it just goes so fast, and it took you a month to make that much money, and you can blow it in a day easily, and it just scales up from there, right? Like, you look at Kevin Hart, it's like, oh yeah, we're rich now, so like instead of going out to the movies, and he buys a house and he buys cars, and it's like it just goes so fast. So it doesn't. That's why it's funny, like when people look like, oh, so and so was a quarterback and made hundreds of millions of dollars. Like, how could he possibly be broke? It's like, he can be broke pretty easily. Like, it's not hard to lose that much money. Like, especially if you're living that kind of lifestyle.
You know what's funny? So I was just talking with my boss at the kickboxing gym just the other day, and we both noticed something because we're in the market, and you'll probably agree too. Because we're in the market, we don't look at things in terms of dollar value. We look at it in percentages because that's more important,
Yeah. Yeah,
right?
for sure.
And I think that's the big problem because those football players are like, I got a $20 million contract, right? But if you actually look at their pay stub, their breakdown, I think something like 15% goes to their PR person, 10% goes to the lawyer, another 15-20% goes to their manager. After taxes, they're probably left with 20% of that 20 million. So it's like they have way less than they really think they do.
Yeah, yeah. Yeah, and then it's also a spending thing too, right? Like if you're looking at percentages, like let's say, after that you're taking in like $5 million or something like that. And then or like let's say it's $4 million and it's like, oh well I wanna buy this this Bugatti or something, or this like, this really nice boat and it's $1 million. It's like, oh, I got, a $5 million contract, a million, that's 25% of your net worth. Like that's way too much to be spending on a toy.
Well, I'll give you a funnier example. So the conversation started because his fiance bought some water for the business, and he was like saying she overpaid by $15. It was like a giant bunch of package. She overpaid $15. Her answer was, well, it's just $15. He's like, no, it's 20% extra. You paid 20% extra. It's like if you made every purchase and you overpaid by $20 or 20%, we'd have nothing left.
Yeah, yeah. That's a great
Right?
way to look at it. It's hard too, though, especially when you get in the
Yes.
market, because like as you grow and like in anything, in real estate or stock investments or whatever, we've talked about this before. The loss side of that becomes harder, right? Because if you're used to like, let's say I'm only risking 1% of my account on my trades, and I have $1,000 account, you're risking $100. But then if you grow up, you have a $1 million account, it's like, okay, now you're risking like what, 100,000 or whatever on a single trade or 10,000 or whatever it is. It's like, that's going to be a lot. Like, it's difficult to look at it like that when you look at the dollar value, because it's like, okay, yeah, it's 1%, but like, that's a lot of money now.
I 100% agree. I noticed that at the start of the year, somewhere around February, I started changing my sizing because I'm like, my portfolio is to the point where I realize like I think it's different for everybody, but it reaches a point where you realize it's not about trying to maximize risk to maximize gain. It's about trying to preserve capital, what you already have. And
Yeah.
that switch flipped for me in February. I was like, holy shit, I need to protect this now.
Yeah. That's a huge, huge thing that a lot of people don't realize in trading. Is that's why, we've said it a million times, you don't always have to trade. Like, there's not always going to be a trade there, right? So like sometimes the best move you can make is just to not do anything and just, like you said, preserve that capital. Because if you're sitting there and it's like, okay, I know how to do this, I make this one trade, I make money. The next day, I make money. The next day I make money. The next day there's nothing there. Then like, I need to save this, because if I screw up, I could blow the last 3 days, and then that's almost a week of profits gone. So sometimes you just got to sit there and just wait, because you can't just force trades. Like the patterns and the charts, they do what they're going to do. So all we can do is sit there and watch, and just keep our fingers crossed that we see something that we know how to make money on. It's a lot harder said than done, though.
There's that famous saying, the markets can stay irrational longer than you can stay solvent. And
Yeah,
it's like if you get into that period where you just can't for the life of you win a trade, how long before you lose everything?
yeah, exactly. Yeah, that's why
Right.
like slow times are really hard, right? Because like if you're used to a crazy market, like we've been having over the past year, and things slow right down, it's like you get bored, and then that time frame goes on longer and longer and longer, and then all of a sudden you see all of a sudden one stock moves and you get all excited, and it's like 6 months ago that would have been like a C- setup that you wouldn't have even looked at, but because you haven't seen anything in so long, you're thinking, oh, this thing's perfect, right? And then you lose all your money because it's not actually a good setup.
I want to say I think you're probably your approach to trading and your progression I think is probably the most sensible way because I think if people put either too much money in the market or think the market is where they're going to make the majority of their income, that's going to lead to you making more emotional decisions. Whereas, like, if you have, like, you've had a full time job this whole time, and the trading's kind of on the side. So then,
Mhm.
like, you don't have the urgency. It's like I have to make this next trade to put dinner on the table, and so because
Yeah.
you don't have that urgency, you could, you know, be a little
Yeah.
bit more choosy with your setups.
Yeah, and that's like, I mean, if you listen to anybody who's a full time stock trader, that's what they all say. Like, like I've listened to enough interviews with guys, and the general consensus from every single one of them is basically like, I was making the same as I do trading at my normal salary job for 2 years before I decided to retire, or like, switch over to doing it full time, or like, I was making double what I was making for 3 years before I decided to try it full time, or like I'd paid off my house and I had no expenses and I was also making my normal salary trading. So that's when I did, it's never just like, okay, like I think I'm doing all right. Let's just give it a shot and dive in there, because you can't have that stress, right? Like these guys are like, okay, well, I've been doing this, kind of just, 20% of my focus, and I'm making the same as I am at my day job. So if I put 100% of my focus in, it's going to be, it's going to be a cakewalk basically. But you can't just like, quit your job and just be like, okay, like time to figure this out. Like, let's just sign up for some courses and learn how to do it, because then you're going to be stressed as hell. And if you're sitting there and 3 days go by and you haven't seen a trade, you're going to be freaking out because you're thinking, oh my God, I'm not going to be able to put food on the table next week if I don't trade. And then you're going to trade and then you're going to lose money and it's going to stress you out even more. And then, it's a slippery slope.
Oh, that's like the worst case scenario. But even if you've been trading on the side for say 3 years and you're starting to get it, you start making the money. I think that's still not a good make the full switch yet if you're wanting to do that, right? To let more time pass. Yeah.
Yeah, exactly. You want to have a lot of money in the bank. You want to be really good at it. Like it's not a quick thing. Like you got to be real comfortable in it.
I just looked it up. Government approved $15 an hour minimum wage starting December 29th this year.
In Ontario here?
Canada, federal.
Oh yeah. Oh wow. And when I first started, I think it was, I want to say like $7 or $7.25 when I started working.
Yeah, I think I got somewhere around the $6 level when I was working at the zoo. It was 10 cents above minimum wage. That fucking.
Oh, nice. Yeah. I still remember my best job ever when I was at the time I was making, I think I was making like $12 an hour and I was 19. And then I got a job snow plowing and the guy said that he was going to pay me $19 an hour. I was like, all right, I've made it. Like, this is it, man. I'm rich. Yeah.
And 19, that's good money though at that
Yeah.
age.
I mean, I've been making basically minimum wage for, 4 or 5 years. So I was like, this is perfect.
Man, I had the worst habit in high school for a couple of summers. I worked for my best friend because they do like renovations. But mostly they polish and cut mirror and glass. So we used to install windows, mirrors, and broken glass and stuff like that. And then this is not a knock on them. This is actually one of the great things about immigrant families. But like they're all like no frills family. All hands on deck, all age groups, little brother, little sister. Everyone's at the shop working, right? Like 12-hour days. And then I remember we used to work from Monday to Saturday, 6 days a week. They would include our lunches. At the end of the week, we would get $120. So I worked it out. It was $2 an hour. I didn't. Yeah. This is years later, but it was like, but we thought we were ballers because like in high school at 16, you got $120 cash in your pocket and Saturday night.
Yeah, that's the best, man.
Yeah,
you have no expenses. Like that $120 goes a long way.
But that actually reminds me of the something I wanted to say about them is that like they're from Vietnam. They're an immigrant family, right? I don't know what program that they fell under, but apparently when they came here, the government loaned them some amount of money to start a business. I don't know if it was a special program just for the Vietnamese or it's some kind of. But anyway, so they got some money to start a business. They started with the company working for them, cutting and polishing mirror and glass. They got to the point where they saved enough money where they opened up their own shop, bought some secondhand machines for polishing and whatnot, and they paid off that loan. They're full citizens and whatnot. It's like there's still tons of opportunity in the West compared to almost anywhere else in the world, right? And it's just if you just increase your effort by just that little bit and be a little bit wiser with how you spend your money, you really can still get ahead.
Oh yeah, for sure. It's not easy, but I hear people complain all the time about taxes and this law and that law and insurance and interest and all this stuff. It's like you can complain all you want, but at the end of the day, it's like one of the things that my dad told me when I was like 15 years old. He said, my accountant gave me the best piece of advice I've ever heard in my life when I was younger, and I've stuck to that my whole life. He said, don't worry about taxes. Don't worry about payments. Just focus on making as much money as you can. That's pretty much my motto that I've lived by.
So that's where I disagree with my dad's philosophy. I think that's what started me off in a bad way because I wanted to be anything but him in terms of money, and it sent me off in the wrong direction because he's very pragmatic. Like if you give him $5, he'll find a way to buy $6 worth of shit with it. Right. So he's that kind of guy. And like, but he has the opposite mentality where it's like, I can't make any more money. And so I need to save or figure out another way to get value out of the same income. And so like he still lives a very Spartan kind of lifestyle. And I'm like, it's great. I guess it's a great survival strategy, but it's not how you get ahead.
Yeah. A lot of people get stuck in that though, because like I find it's a lot of people that are just upset about like taxes and all this kind of stuff. They focus more on the negative, and it's like, at the end of the day, it's the stuff you can't control that'll drive you nuts, right? Like don't put your attention on things you can't control. Like all we can do is just look at what we can control and do the best we can at that, and that's the only way you're going to get ahead.
Yeah, and like I was talking, I forgot who I was talking to, but I have a few friends, or quite a few friends in either renovations or construction. You're included, and I'm like, or it might have been you were talking about. I'm like, there's a huge void or huge demand for people in the trades right now, and they pay great money, right? Like I forgot what it was, but I think it was just a 1 year course to be a crane operator, and it's a great paying job, and you're in construction, but it's not quite as labor intensive versus some of the other positions there, right?
Yeah.
And it's like just set aside your life for a year, get that certification, and they're begging for people to fill those jobs.
Oh yeah, there's a ton of demand for that. Like I know, like I used to know a guy at one of the gyms I went to. He was in his like I think he was like 22 at the time, and he was like one of those like big crane operators that builds like skyscrapers. He was making $150 an hour at like 22, 23 years old. Yeah,
Holy shit!
a ton of money. Like he was working like 50, 60 hour weeks. So I'm pretty sure he was making like $400,000 a year or something like in that neighborhood.
You know what? I just had a thought of if we have the right listeners, some lawyer or law students going, I'm in my fifth fucking year. I'm like $100,000, $50,000 in debt, and I wish I could get $120 an hour job.
Yeah, man, and there's a lot of jobs for it. Like it's high stress, obviously. Like you don't want to make a mistake, but yeah, there's a ton of really high paying jobs out there if you know where to look for it. If you don't mind doing that kind of work.
Yeah. So there's a lot of there's a lot of options, right? There's like if you're like the physical kind of person, or you're like probably more social, that's a nice job tailored to you. If you're an introvert, there is literally no better job than being a software developer. And that's one of the few areas where it's highly lucrative and nobody gives a fuck where you learn to code. You apply to a company, they give you a test, you pass that test, that's it. We know you can code. End of story.
Yeah, that's one thing I wish I took more. Like I took code for one semester when I was in university, and like looking back on it now, I wish I did it longer because it was interesting. But like at the time, I didn't know that it was going to be this big of a thing, right? So
nobody did, man. I got into the wrong program at the wrong time. I got into traditional animation, hand drawn, in Sheridan College. So Sheridan was the best school at that time, and they like Disney kind of recruited from them. My second year, towards the end of my second year, Disney was like, "Yeah, we're shutting the doors. We're going 3D, fucking Toy Story, and we're not going to be drawing anymore." So I had the choice of starting over again, learning 3D animation, or just do something else. And I was like, I can't do more of this thing. Like,
yeah, that's a pain.
And like I just wish I got into coding because I was kind of lost a little bit for after that. I was jumping around jobs and I ended up at Brinks, but yeah, like if I got into code back then, that was 2002 to 2004. No, it was 2004, right? So that was like I would have been like an OG coder by now. I might be like some mid-level manager at Google or some shit.
Or you could have been the guy that made Flappy Bird.
yeah, exactly. Holy shit, I could have been one of the first app developers.
Yeah.
So I think want to wrap it up from here?
Yeah, I think we're good. I don't know how long we've been on, but it feels like a while.
I want to leave one message. I think that seems to be the theme of this episode is like there's a lot of benefit to being prepared and anticipating the future, and like just put a lot more thought into your actions, whether it's budgeting your money or your career.
Yeah, for sure. Yeah, just be smart and don't buy too many expensive holidays if you can't afford it.
All right, YouTubers, have a good one. See you again.